Today's Thursday, April 4th, and this is a trade review and a position I'm currently holding involving Target, ticker symbol TGT, and as of the time of this recording, this stock is quoted at $173.98. And since trading started this morning, Target is down $1.52. So this is the chart layout at the weekly time frame. Each candlestick represents a week's worth of trading. This is the current candlestick right here. So from this broad look back, which is going as far, I've taken it as far back as to June of 2020. And the reason for that is that relative to the current spot price, the most reasonable and relevant support and resistance levels are the two horizontal lines. And just looking left, we can see that these two support resistance levels has had some value in the past. So I'm anticipating that this is still relevant, considering that price was ranging sideways for several months back in 2022 to all the way through early 2023 before price dropped below this $151 support level. So now that price is slightly above the current support level of 169, I'm anticipating that there's a probability that price may pull back. But prior to that, the current market structure, since this major move to the upside back in November of 2023, the current market structure appears to be inside this ascending channel. So the upper blue is acting as another layer of resistance. The bottom blue is also acting as another layer of support. The dotted line is acting as both support and resistance as price is bouncing around inside this channel. So what I'm going to do is I'm going to throttle down to the daily time frame. So this is Target at the daily time frame. Each candlestick is a day's worth of trading. The red vertical dash lines are markers for expiration Friday for monthly option contracts. The most recent expiration was back on March 15th, and the upcoming expiration for the month of April is April 19th, which is about 2 weeks away from tomorrow. And we can see here that price is still on the upper half of this range, as price is above this dotted line. So it's pretty much between the upper resistance and this dotted line. However, heading into expiration Friday, I'm anticipating that price may come back down and retest 169 with some wiggle room that price may drop a little lower than that. And the reason for my bearish outlook is that what I've done is I'm using this other tool. It's the Fibonacci time ratio. And that specific tool requires 2 anchor points. So the first anchor point I'm using is this candlestick here from November 15th, as this candlestick broke above this sideways pattern. So that was when Target was ranging sideways from September. Let me just mark this up here. So there was this consolidation phase right through here where price was just essentially going sideways, and then price gapped up, meaning that price opened much higher than where it closed the prior trading session. So again, using this candlestick from November 15th as anchor point 1 for this tool right here. It's called the Fibonacci time ratio, this tool right here. Now, so that's anchor point 1. Anchor point 2, for the same reason, is that price broke above this resistance level of 151. So this candlestick here from March 4th, I'm not using that because the closing price is below this local support resistance level of 151. Rather, I'm using this candlestick here as a result of another gap up, meaning that price opened much higher than where it closed the prior trading session. And here we see that the dotted line, because price had to break above it with conviction, the market essentially gapped up. Because of that, I'm using this candlestick here from March 5th as anchor point 2. So with that in place, this yellow line is pegged to April 8th. So I'm anticipating that there is this probability that price may start trending to the downside for that potential retest of 169. So with all things said, what I did was switching over to the trade tab right here under the option chain. I didn't short target stock. I didn't short the common shares. I shorted via option contracts right here. So there's a flag position involving the April 19th expiration date, which is 15 days away. And right down here, the details, it involves the $167.50 strike price. And as a buyer of option contracts and bearish, I'm on the put side. So essentially what this contract is saying is that on or before the close of April 19th trading session, I'm anticipating target will be at or below $167.50. And we can see here that in front of the option description, there's 100. So this 100 is pertaining to the fact that each option contract is equal to holding 100 shares of the underlying security. And right here under quantity, I have 3. So I'm holding 3 of these contracts, which is about 300 shares of target. Now, these 3 contracts will expire worthless. It goes to 0 in 15 days. And when I entered this trade, the option premium was quoted at 71 cents. And since I entered the trade a few minutes ago, the premium is increasing as the stock price is dropping. So it's currently, the premium is quoted at 86 cents. However, it's a lot higher than that. And I'll get into that in a little bit. And since I entered the trade, the profit and loss side of this ledger is reflecting a positive balance of $48. So the trade is going in my direction as my premium is increasing in value. So just to recap on how these option contracts are valued, right here, again, the option premium to my entry price is quoted at 71 cents. Now, as mentioned, each option contract is equal to holding 100 shares. So the multiplier is 100. So one option contract is actually valued at $71, not 71 cents. And I've picked up 3 of those contracts. So not including commission, I'm risking $213 in this trade for the next 15 days. Now the alternative was to short 300 shares. So using the current spot price of $173.43, $173.43, if I was to have shorted 300 shares, the margin risk exposure would have been over $22,000. So I thought it would be most efficient that I traded the options rather than committing $22,000 in margin risk for the next 15 days. And specifically because the general trend is to the upside, right? The overall trend is to the upside. I'm essentially betting against the market. So I didn't want to commit $22,000 of margin in this high probability or high risk trade. Again, I am betting against the market for a pullback. So I thought the most efficient trade product was option contracts. So that's the current status of this trade and my general thesis for this bearish outlook. So for the purpose of time, I will pause it here, give it a few days, let the trade work itself out, and I'll do another status check, possibly, if not this weekend, I'll pick it up sometime next week. So this is a quick status check on the target short. Today is Sunday, April 14th. And as of last Friday's close, the stock ended the week at $166.12. And the stock was down a little over $5. So here again was the markup that I was anticipating pullback to be occurring on or around April 8th. Price did fall, but it really didn't fall until Friday. So, but price did break below the dotted line that was acting as a strong support level. So now it's at the bottom half of this ascending channel, or this bottom half of this range. And with 5 days remaining, I'm still bearish for a further drop in target. Considering what's going on in the Middle East right now, it seems hostilities is ramping up. That might put the volatility that much higher when the stock market opens Monday morning. However, I'll be tracking the S&P 500 futures later tonight when it starts trading at 6 p.m. Eastern. And I don't know, maybe this week is going to be very crazy. But in any case, target regarding the trade. So right here in the profit and loss side of the ledger, the position as of Friday's close, the trade is up $611 net profit. And the option premium is now quoted at $2.75, where it's actually $275.50. And importantly, these contracts are designated ITM, or in the money. So this is a very profitable trade, considering that it's already up $600. So that's the current status on the target position. With 5 days remaining, I'll pause it here. I'll give it another day or so, and hopefully we'll see the market pulling back a little bit more. And also, we have a gap right here, and it's possible that price may come down to fill this gap. So the gap I'm referring to is this gap right here, because the closing or the high of this candlestick from March 24th, and right here the low from this candlestick here from March 15th, it's enough to say that that would be what is required to fill this gap. So hopefully we'll see price of target come down to 155. That's a big drop, another $10 move within the next 5 days of target. That's very significant if that does occur. And provided that if that does occur, then that would essentially break this overall market structure, this uptrend, because then at that point, the spot price would be clearly below this blue support level, for which target's been ranging in since November of 2023. So again, I'll pause it here. I'll pick it up maybe Wednesday or Thursday, but definitely before expiration Friday and before closing this trade out. Today's Tuesday, April 16th, and the stock market has been trading for a little over 10 minutes now. But as of the time of this recording, target is quoted at $163.84. And since trading started this morning, the stock is down $1.17. This red candlestick is today's candlestick, so it appears it's now literally at the cusp of breaking below this gray box for that potential gap fill. And then if price does get back inside this gray box, then that would start the fill. But I'm kind of concerned about this blue support level. It's possible that price may consolidate here heading into expiration Friday. So there's literally 3 days remaining in the life of these contracts, so I don't want to press my luck too much. And what I'm referring to is that switching over to the trade tab, right here, the profit and loss, the P&L, is reflecting a positive balance of $985. And right now, the option premium is quoted at $4.03, or actually it's $400 at this point. When I entered the trade, it was at 71 cents or $71. And again, the contracts are designated ITM. With 3 days remaining, I'm going to go ahead and place an order to close this out with the option premium if the price breaks above $4.25 or $425 per contract. So what I'm going to do is I'm going to switch over to the option contract, the chart for my specific option short. So this is the chart of my specific option contract. So right here by the ticker, it's TGT. The ticker is TGT, target, for the April 19th expiration, the $167.50 strike price, and it's on the put side. So if I open up Active Trader, again, going back by the ticker, it says net position +3. So this chart is specific to my contract. And right now, the option premium hit this high, and this is the current bid, I believe, or the ask price. So what I'm going to do is I'm going to close out, I'm going to place an order to close out those 3 contracts. If and when price breaks above $4.25, which is pegged to a $1,060 profit. So I don't want to get too greedy. So I'm going to place the order right there. So there, it was filled. I got closed out at $4.25. So I am out of the trade for the net gain of $1,060. So this was a good position to be in. So what I'll do is I'll switch back to the stock chart. So again, I will be monitoring this. Even though I'm out of the trade, I'm going to continue tracking this. Again, the ideal opportunity is for this price to come down, filling this gap. But again, I have some concerns here. So I thought I'd just close out the position. So right here under quantity, it's 0. I am out of this trade. So what I'll do at the end of this clip, I will provide a detailed breakdown of my entry and exit and the net profits and commission fees. So until the next setup, I will end it here, and I'll see you.